All right, let's quickly differentiate between sell stops, buy limits, and sell limits. Okay, so basically limit orders and stop orders. So first of all, let's have a look at the buy stops. Okay, so imagine that right there, we're in a downtrend and we're just looking for longs. Okay, and just before your entry, you actually have that nice indecision candle, that nice doji. But you don't want to enter after that with an instant execution. And what you want to do is you want to ensure that momentum is kicking in. So what you do is you set a buy stop, okay? And buy stop will always be above the price because after that indecision candle closed, the market is currently sitting in right there. So a buy stop can only be set above the current price. So when actually the market is right there, and once it crosses the buy stop, you are gonna get into the trade right here, and then actually momentum is gonna start continuing up, and you're gonna get into profits. Okay, so you don't enter right there on that candle, but you set a buy stop above it. So once momentum actually starts to pump up, that's when you're triggered. Okay, once the market crosses the price to the upside, this is a buy stop order. Okay, just having a look on the right for a buy limit order. Let's say we're having a potential uptrend, then you have a market structure shift, and yeah, you have a big pin bar right there. But you don't feel comfortable to enter like this, stop loss above after the pin bar. What you want to do is you want to ensure that after this pin bar, momentum is going to kick in. And currently your market price is right there. So this is where the pin bar closes. What you do is you set a sell stop just below that candle, okay, or just a few pips below. It doesn't have to be perfect. I don't want to tell you always set your sell stop or buy stop 5 pips above or 5 pips below your entry. You just have to feel it where you want to place it. Okay. And for example, when the next candle opens, if it pushes down and once it crosses that level of your order, this is when you're going to get executed. Okay. So basically you get executed with momentum in your desired direction, and potentially then the market is going to continue. And of course, a sell stop can only be placed below the current price. Remember, buy stop is always above the current price, which was right there, and sell stop is always below the current price, which is right there, so that you ensure that you are triggered with momentum to the downside. Okay, really hope that's clear. Pretty simple explanation, nothing too hard, so I really hope you actually understand. And let's have a look at some limit orders. Again, it is more or less the opposite. So again, you have the market going down, the market really reverses, and then you actually don't want to enter with momentum, but you want to get on the retest. Where is your potential retest? Well, on the structure. So if you think that you can enter right there, what you can do is you set your buy limits there. So basically on the structure, you set your buy limit, and then your stop loss potentially can go below right there, and then your take profit. This is the wrong two, by the way, but yes, you're gonna set your buy limit right there, stop loss potentially below, and then take profits above. Okay, so this is a buy limit, and the buy limit the difference again, buy limit can always be set when the market is above it. So for example, once the market pushes up and you're looking at the price and your current candle is right here, and then what you can do is you just set your buy limit, and once the market comes down, taps inside that area, this is when you're gonna get triggered, and you potentially expect a reversal, not a continuation below. Okay, so that is the difference. You expect a reversal with limits, and you expect a continuation with stops. Okay, and again, a simple example with a sell limit. The market is trending up, creating a double top, little shift right there, and a strong break of structure. So currently you're looking at the market while it is down there, and you're like, okay, I have my break of structure. Now I'm looking for the retest for a potential aggressive entry. Okay, where is my most recent structure broken? This one. Where do I set my sell limit? Right there. Where is my stop loss? Below the structure. Above the structure. Right there. And take profit below for a new lower low. Okay, and yeah, this is actually it. Again, the sell limit can always be set when the market is below. So when the market price is below the limit, and you always want to see a reversal when you have a limit order. Okay, it's not a continuation, it's not to tap and go to the upside. Of course, it can go, it can stop you out as well. It can just continue up, that is totally fine, but you would expect a reversal. Okay, so that is a very, very quick explanation. Really hope everything is clear. If it's not clear, again, questions are always welcome, but I believe the concept is pretty clear. And just to memorize it, stops are for momentum, limits are for reversals. Okay, but again, everything is gonna make sense. Okay, so again, if you have any questions, always make sure to get in touch.